Hello everybody, welcome to Sniper Sundays on the 22nd of September. I hope you are all well, and I hope you're all having a great weekend. Sniper Sundays getting us ready for another week in the market. Off the back of a good week, we had a nice week last week. 3 trades, 2 winners, 1 loss, and last week was basically a very good example of how to trade and how to trade correctly. We had 2 winners, 1 loss, but with the correct risk management, the loss was very limited, and you can see if you keep to risk reward that the trades that we won far outweighed the single loss. We only ever risk 1%. If we lose a trade, we lose 1%, but all of our trades are usually a minimum of 3% to 1%, so a risk reward of 3 to 1 minimum. We had a nice trade, which I'll run over in a little bit. GBP USD was about 5% and so on. So really good week in the market. So let's think ahead of next week. So next week we've got a busy week again, which is good news for all of us. High volatility, I expect. As always, you can see I'm on the economic calendar. I'm going to look ahead of next week. So Monday, straight away, bang, first thing in the morning, 8:15 a.m. in the UK time. We've got Euro news, flash services from France, Germany, and then we've got the ECB President Draghi speaking at 2 p.m. So Euro on Monday morning. So that's quite interesting on Monday afternoon. Tuesday then we've got Japanese news, Bank of Japan speaking, 6:30 a.m. UK time. Then we've also got the Reserve Bank of Australia speaking at on Tuesday morning. And we also have some consumer confidence from the US. Wednesday, New Zealand dollar comes into play. So Aussie dollar, New Zealand dollar early in the week, Euro first thing. So there's lots and lots of news coming out. We've got the New Zealand dollar official cash rate and rate statement. We've seen how impactful that can be in recent weeks with different countries. And then on Thursday, we've got more Euro. Draghi speaks again. We got the Bank of England speaking. Then we got the FOMC press conference, and we've got GDP from the US. So loads of news, and then we've got some more US news on Friday. So lots and lots happening this week. So expect some good volatility in the market. Now, over the weekend there is various news, but one thing that might, which as always we need to let the market settle on a Monday, is we do have some more news regarding sort of the situation in Saudi Arabia. With the US and Iran, following the gap up last weekend when we saw oil gap up because of the situation in Saudi Arabia with the attack on the Saudi Arabian oil facilities. We can see here that the US forces, let's see here, the president has approved the deploy of US forces, which will be defensive in nature and primarily focus on air and missile defense, to go into sort of Saudi Arabia. So this can sort of escalate possibly. Obviously, war talk, you can see someone just commenting, don't take any notice of these comments, these are just random people. But you can just see here, war near, people, you can just see the talk about war could be thrown into the mix, even though it's not that bad at the moment, but it can escalate quite quickly. So, on the back of that, again, let's just start with maybe some commodities. So, off the back of that, we know that if there's any talk of war or anything like that, the first sort of thing to be affected is the gold and US oil and commodities and so on. So at the moment, we'll just start off with gold and what we were looking at last week. Super clean, really clean chart at the moment that I'm just showing here on gold. I haven't got all my levels on here. Just keep it nice and clean at the moment. So what we can see here was a sort of really nice head and shoulders formation forming. We had left shoulder here, head and a right shoulder sort of forming over in this area here. This neckline has been holding very strong. We came down here, and off the back of the FOMC meeting last week, we had a big push down, tapped this level, and we pushed up once again. Now, on Friday, we were monitoring this and keeping a sort of an eye on this and waiting for the market to make a move first before, or to give us some sort of indication. Now, if I just get rid of this sort of area here, I've had this trend line highlighted since last Sniper Sundays, explaining the third touch of the trend line. Again, if you didn't watch the Sniper Sundays last week, go back and review. For point 1, point 2, point 3. We hadn't quite touched the trend line yet. As explained, when we're not quite there, we can often see price just sort of consolidate till we come over towards the area. And we reacted off that level once again. It's a sort of perfect entry down here, but this is off the back of the FOMC meeting. So it wasn't a place where we wanted to place a trade. At the moment, we're now looking bullish as we seem to be pushing up. We'll just drop back out to the daily. We can see we're sort of rejecting this level, this support level once again. We've had various tries to try and break, and now we're pushing up with quite a bullish day on Friday. Weekly looks very bullish. You can see here, it's almost like if I just move this out of the way, come down, doji candle, bullish engulfing, almost like a morning star formation, trying to push back off that support level and push back up higher. Now, as explained, I'm favouring long on gold because of certain situations in the economy. I've been saying that I expect gold to try and push up and break the recent highs and come up to that sort of 1.600 level at the most. But really, what I'm looking at first is 1.560 to 70 region around here to break above this, as explained in previous videos. So at the moment we look like we're going to break up, but I'm going to wait to see what happens on market open. Should there be any more further talks of war and things escalating in Saudi Arabia, Iran and so on, then we should expect an influx of investment into a safe haven of gold, and we should see this push up higher. We might even see a bit of a gap. So I'm watching this area now. I will be watching out next week. So gold at the moment for next week, I'm going to be looking at long trades. At the moment, there is no sort of good risk reward for a gold trade. That's why even last week, let me get rid of that. That's why even last week when we were pushing up from here, again, like I've explained before, if there's no good risk reward on gold, what we can use is use gold as a measuring tool. We know that gold can affect different currencies. So if we can see that gold is bullish and we're still favoring gold to the upside, then we can look at other trades, for instance, USD JPY to come down because of the inverse correlation on the two. So if there's not a good risk reward on gold and you're looking at entering here and you've got a wide stop loss, I'd rather not take it. But then if I see that I can sort of cross-reference that into another currency or into a currency and get a good risk reward, monitoring that I can see that gold's going to go higher or come lower, then you can sort of transfer that into some forex pairs. So at the moment, gold is looking good to come up higher. I will be watching how market opens, so we've got to kind of wait until it does. For the past few weeks, that's kind of been a situation on Sniper Sundays where we can't sort of give out too many indications of where price is going to go, because the market is very temperamental to fundamentals at the moment, and it has been for a lot of this year. So over the weekend, we need to kind of monitor and see what happens there. US oil. So I didn't really touch US oil since we had that big gap open. I was in no rush. We pulled all the way back down to sort of around the $58 region, which you can see here. We still have our long entry down at 53, right at the bottom of this wick. And you can see here, this $58 level is a kind of like happy medium through all this sort of price action. We've got resistance here. Let me just highlight this, guys. You can see here we've got this sort of resistance, broke through support, come back, see resistance, come back, acting as support. So I am now watching this and see how obviously the developments in Saudi Arabia and Iran are this week. We can see here on a daily chart that we have attempted to break out of this daily trend line and we've pulled back. But I am watching now to see on the lower time frames, go to the 4 hour, we can see now that we are starting to reject this sort of $58 regions. You can see 1 push down, 2 push down, 3 push down. So this could be a potential long trade next week. So I'm watching out for that. Watching to see now if we can push up higher. Let's see if we got a Fibonacci. Let's just take it from here. You can see that we had this sort of big impulsive move coming down. We might just hover around, might reject the 61.8% retracement level. So I'm keeping an eye on this at the moment and monitoring for any long trades next week. It's a little bit choppy at the moment since we had that big push up and we had that big push down following, and then we kind of just halted for a few days. So here we're just sort of moving sideways. We're indecisive at the moment and we're just consolidating and ranging in this area. So I'm going to wait for the markets to open, see how the market reacts to anything over the weekend, and we'll be looking to pick up on a new trade on oil next week. Oil, just off the back of oil, let's just go and look at USD CAD, a pair that I haven't really been interested in this week. Reason I'm bringing USD CAD up now is just because we're talking about oil, and for anyone that's new to the group, as explained many times before, USD CAD is heavily influenced by the cost of oil, the price of oil. Canadians export 80% of Canada's export is oil, so the currency is heavily dependent on the price of oil. So if the price of oil goes down, then the Canadian dollar goes down, and vice versa. So depending on what happens with oil, this could make a difference to what happens with USD CAD next week as well. The USD CAD, we have, just regarding what I just said about USD CAD and oil, there is a pinned message in the top right corner of the community chat, where all past webinars and past and any educational material I'm going to be pinning to the pin section of the community. So when you're on the community chat, top right corner, there's a pin icon, and on that is some saved information. So there's some saved information, just the basic information about USD CAD and oil correlation. So USD CAD here, we can see here 1, 2, 3, 4, sort of 5 days, we're kind of just halted here. This is why I wasn't looking at getting into a trade. And like I mentioned many times before, it's not about just knowing when to take a trade on some pairs. It's about knowing when not to take trades on other pairs. Because if you're in this trade, then you would just been stuck here all week, sort of messing around with your account. Whether you took a long or a short, you were just being up, down, up, down, up, down, and then it's just distracting you from other things in the market. So what we do is, looking at the fundamentals for the week ahead, we see where the volatility is going to be. We can see on Monday that the volatility is going to be with euro. We can see other pairs, Aussie dollar, New Zealand dollar on Tuesday, Wednesday. So they're the pairs we're going to be looking at. Other pairs where there's not as much volatility and we can see that price is just sort of ranging, we stay away from until we keep an eye on them, but we stay away from trading them until we see something a little bit more obvious. Now USD CAD, as I said here, a bit of a quiet week last week, really just ranging, just floating around at 1.32500 level. Going to the daily, the weekly chart, didn't really do much here either. So I'm standing aside on this and we'll wait and see. It does look like it's running out of steam. You can see we pushed up here, spike, bit of a spike, slowing down here. Looks like it's about to have a downturn, but I'm going to stand aside and wait on that. Now let's get back to the euro US dollar. So as I said, big day, big news on euro on Monday. Monday will be a busy day for euro. So what I'm watching out for here is on Friday, we'll just go into where we were. We'll pick up where we left off. So Thursday or Friday morning, I highlighted this sort of resistance level here. And this is exactly what I mean, guys. You don't just have to wait for just the trades that I post. Obviously, the morning calls and evening calls are here covering a wide range of Forex pairs and commodities. So you can then use that in line with your own trading to take your own trades. So for instance, lots of people took a short here on Euro USD. I didn't update on it because we had another trade on the go, and what we can see here is the US dollar has been very choppy for the last few days. So on a Friday, didn't really want to jump into a US dollar trade, given that we just had a lot of choppiness, a lot of ranging on the US dollar. Now, however, I explained here that we had this sort of resistance level, and we had this counter trend line. Should we break this counter trend line, we could see a lot of downside, but we do have that weekly support level of 1.10. So we've broken this counter trend line now. I'll just get rid of this and I get rid of this resistance for the moment, just so we can have a clearer picture and just see what price is actually doing. So you can see here now, we just tapped this sort of level. At the moment, it looks like it could break. We are still underneath the daily, the long-term daily sort of resistance. This is final support, but we've got big news on Monday, so it's a hard one to call at the moment. We're going to have to see what the Euro news does. Again, this has been quite mixed. If we look here on the daily chart, we've had a bearish day, followed by a bullish day, and bearish, and then sort of a push back up, but then push back down. But again, throughout the whole week, we sort of just moved sideways. So it's a kind of hard one to call on Euro US dollar. Going to wait for some signs on Monday and pick up from there. Should we break the weekly support, then it looks like we could come down and create new lows. Let's just have a look here and create a channel, see what lines up here. Okay, yeah, there we go. So we might see a push back down into sort of these regions. We could come even lower. So it all depends on what's going to happen with Euro, with the news that comes out on Monday morning. See what happens first. We could have another push down with Euro, and it also depends on what happens with the US dollar. But Euro USD, going to have to sort of wait for this one on Monday to open up, see how the market reacts. At the moment, we're just moving sideways, so it's not the easiest one to call. We did have this sort of little triangle formation on the lower time frames. I'll just drop down to the 1 hour. You can see here. I explained this one actually during the week where we saw this little fake out. We saw this fake out of the triangle formation. Here, a first break, fake out. You can see doji bearish engulfing, a good sell trade there. You can see here the reversal signs, doji bearish engulfing. Then we pushed down and then we came back down. But at the moment, seeing as we're hitting a major support, weekly support level 1.100, so we're going to stand aside in this and wait for price action to give us a few more signs, and then get in at the right time, like as you've seen on the other trades. Just being patient and entering the trades, just like GBP JPY last week, being patient, and then hitting it just at the right time. So then we're not going into drawdown, we're not beholding trades for days and days in a loss. Then we can go straight into profit and make profit straight away. So keeping an eye on Euro USD. Euro GBP, interesting one because of the pound. And we saw that the pound had a little bit of a weakness on Friday, as you can see when we had that short trade on GBP JPY. I've explained this before that we had this now 61.8% pullback on the weekly for Euro GBP. We've hit on 0.8800. So this is interesting now. We're well overdue a sort of a proper retracement on this now as well. We haven't had much of a retracement on Euro GBP. Had very little retracement. So we can look at this now from the last significant high, pull on all the way down. We could have a little pullback up and possibly into 0.8900, maybe even 0.900 once again. But we are due a bit of a retracement here, a little bit of a breather on Euro GBP. So at the moment, monitoring this level. It's a nice little level here. We can see that price is rejecting at the moment. Going to monitor this on market open. We can just see here, we drop down to lower time frames, the sort of signs that we look for. You can see here, we've got a left shoulder, we've got a head, and we've got a right shoulder coming across very, very nicely there. But yeah, I'm going to wait for market open, see how the pound reacts, see how we're going to continue the weakness, or will pound still be able to make another push higher. But at the moment, we've been pushing down, and it looks like it's time for us to have a little bit of a rest for pound. But we'll see. You can see here what I explained last week. Every time the Euro GBP tried to push up, we got pushed straight back down, showing that we just didn't have enough strength. As explained here, you can read price action. We have 1, 2, 3 little pushes up, then we have one big push down. Same here, one big push down. 1, 2, 3, one big push down. So you can see here, it's taken a lot for the bulls to try and push up with a few candles, and then we're just outdone by one bearish candle. So the bears still have very much in momentum and in control. So keeping an eye on this, we're keeping an eye on Euro GBP next week, but GBP pairs are very interesting for us next week. Now, just while we're talking about GBP, we'll just flip over to GBP USD. And yes, we had a pullback on Friday, which I don't mind, because this is where we take advantage of the market in both directions. So we took an original long trade from here last week, right on the wick at this level here. I said happy medium, I'll go 1.2400, even though most people and most trades were actually a little bit lower at around 1.2390 and just above. So from there, great risk reward, as the risk was set at 1.2375, really small stop loss for 1%. And then to come to our first level was at nearly 4% at 1.2500. As I said, most trades were slightly lower, so it was around 4% at that point. Then we took 50% profit, continued higher, and then remember, I told us to take some profit at this level here. This is getting the most out of the trades at all times. So we took some profit at this level, around this level here, just at the very, very high. Took another 25%. We're still holding 25%, but this is what swing trading is about. Sometimes you have to risk that 25%, maybe even in order to lose it, just to see if we can continue going higher. So you bank 75% at 6% here. And if we just move this to break even, you can see we are pulling down. But even though I could see that there were some signs of weakness on GBP, that's why we took the GBP JPY trade. But at the moment, let's just have a look. We need to adjust this trend line. We can see that the pound is just beginning to sort of try and break this trend line. But we all know that we haven't sort of fully escaped this trend line area at the moment. As you can see here, we come down, made a breakthrough, trend line strategy. You can see here, one breakthrough, we've retested that again. Let's see now how this acts next week. If we can break this sort of region, break lower, then we can see price coming down lower. If we, however, fail to break this level, we might see yet another push to the upside, because remember, GBP is overall bullish. As you can see, high highs, high lows, high highs, high lows, high highs, high lows, high highs, and now possibly create a new higher low. Daily, let's look at the daily chart. Okay, it's not loading for some reason. There we go. Sorry guys. There we go. Daily, you can see it looks a little bit more bearish. We found resistance at 1.2500, and like I always say, again for new people in the group, if we want to see a reversal, we nearly always see a little spike up to the upside first. Try and take out those stop losses that are sitting above there from people taking early shorts, or even enticing people to take a long trade. Then we have a reversal and it pulls back down. At the moment, not the most bearish candle. As you can see, we didn't engulf the previous candle here, but nevertheless a bit of a shooting star, and it is a bearish candle. Let's have a look on the weekly chart. A doji candle showing that we're finding we're indecisive in the market now. So next week we could have a bearish candle to push over, or we might have another doji candle. So we need to keep an eye on this. At the moment, I said if we do pull back down and we close at 25% closes at break even, then it won't matter, because GBP JPY, which I'm going to go to in a minute, should these pairs fall because of the weakness on GBP JPY, on the weakness on GBP, then our GBP JPY trade will come through. So monitoring this level on GBP USD next week. You can see here, nice little candlestick formations here, sort of showing that slowdown in price action. And here, we might even just see a nice little push back up once more. We might see another tribe to push back up. We might find some resistance, but we might even look at taking a hedge trade. Lots of sort of possibilities. We have to see how the market opens, but as always, we'll be on top and we'll be keeping an eye out for it. So, as explained, should our trade come down and hit, where were we? Should our trade come down and take our last 25% out at break even? If it is due to pound weakness, then what we'll see is a further push down on GBP JPY. But your GBP USD for the moment, as I said, I'll watch out for next week. Expect maybe a little push, another push that down to the downside, but we have to keep an eye and be mindful that overall we are still bullish on GBP USD. You can see here on a daily, in this uptrend here that we're in, you can see that we just have a little pullbacks, nothing spectacular, no big bearish move. So you can see that we could still have a possibility of pushing up higher, but I do like this fact that we've come up, sort of taking out the previous high, so we might push down now. This is the same as GBP JPY. If I just remove this out of the way for the moment, go to the daily chart, and we can see here, just like I explained, that before a reversal, what do we normally see is a last push up to the upside. See here how we've taken out the previous high here. We'll get rid of this short zone for the minute. You can see here we've just taken out the previous high here, and then bang, we've dumped for over 130 pips we took on this, with the close 140 pips once we had the close on Friday. So let's just go to the weekly chart. We can see here we've had this very bullish week. Then we've had this doji candle or shooting star. So let's see if this can continue down next week or not. Daily, very bearish on the daily. Looks very nice to continue next week. This is called a Marubozu candle. No wick at the bottom. very, very strong, and a high probability that that price will continue lower than following day. The only problem here is that this is on Friday and we have the weekend news, so what could happen on a Monday could be very different. But should we see this candle on a Tuesday or a Wednesday, then normally what we'd see is a follow-on on the next day. But here you can see sort of doji candle, and then we've broken through. Now what's quite interesting here on GBP JPY, and it's a good lesson to learn, is how I've explained in lots of other videos of how to use lots of different time frames to all together at the same time to make your trading decisions. So what we can see here is, so this is from our short zone. We're short from this area at 1.35. I gave it out at this level. We pushed back up, got a trade around 1.3540, and then bang, we came down to 1.3400, so around 130, 140 pips. Now if I just clear this, what we can see here is price was trying to push higher, higher low, and then we came back up one more, had this last push above the previous high here. We had this shooting star on the 4 hour. Now remember, higher time frames are always stronger, so 4 hour candlestick is very good for direction. So we had a 4 hour shooting star here, showing rejection and showing that price is rejecting this level and going to push lower. We also created this double top here, so you can see we had one push up and then a second push up, so a double top on the 4 hour. Drop down to the 1 hour, as showed on when I updated about this. We had this shooting star, hanging man here, and then a 1 hour bearish engulfing. This is signaling the intent that suddenly the bears are coming, push down, and it's time to look for a change of direction. Then we have a little bit of a pullback, which we normally see, and then but not always. Sometimes it can be such bearish momentum that we can just keep pushing down lower. But we had a little bit of a pullback, entries taken there, and then we came down. 30-minute chart, we can even see that not only did we have this double top here with this number one top and then a number two, you can also see here we had this sort of double top here. We had one push up and then another push up and then came down. We also had, along with this, we had two shooting stars, push down, sort of more evening star formation, push back up, but then we had a bearish engulfing here as well. Drop down to the 15-minute, and we can see here with that area here what I spoke about, another double top here, and that bearish engulfing there as well, and then pushing down. So we had lots and lots of signs from 15-minute flicking out to the 30. You could see bearish engulfing, flicking back out to the 1 hour. You can see there's one very, very big bearish engulfing candle. 4 hour, it ended. You can see that all of that price action was included within this 4 hour shooting star, and then we could see that there was going to be a change of direction, and we took the trade. So let's have a look where we can go next week. So we'll have to see whether this can continue down lower now. We're back below 1.3500. We could always come back here for a retest of that level first. As always, once we break through a key level, we can come back and retest. This is why we take some profit, and we don't be greedy and think that we're going to hit a jackpot on every trade. We constantly take money from the market, constantly take. Not holding trades thinking this is the big one, this is going to be the 300, 400, 500 pip trade that's going to make me rich, because trading isn't a get rich quick scheme. You take money every day, slow money, and then it builds up, and that's what makes you money profitable and makes you rich. So here, like I said, once we come down 100 pips, we take some profit. Don't get greedy, because everything has to, like any trend, this has to go back up to come back down. So rather than watching all of your profits come all the way down to come back up again, if it does, then what we can wait and see is we've taken some profit now, we're running risk free. We do see a pullback up to 1.3500. We might be able to look for another short opportunity and less risk. So we add another short opportunity and come back down again. We might be able to scale in and add another entry. But yeah, so next week we could see that we might have a pullback into sort of that 1.3500 level. If I go down to, that's the wrong chart. If I go down to the 4 hour chart, you can see here we've clearly broken through here. We have actually broken through, retested here as resistance, as you can see, which is another good opportunity. Had you missed the original, broke through support, come back, hit resistance, and now we're heading down lower. But we do have these various levels of support here, sort of acting as last lower highs and so on this sort of uptrend. So we've got to be careful and keep an eye on these. Just put on this trend line here. You can see that we've sort of broken this trend line now. This trend line support that we were finding some support on Friday. We were around this level. You can see we broke through, we've come back, retested that level as resistance, retested the trend line as resistance. Now we're breaking down lower. Now this is the level around 1.3380, 1.3400 that we'll have to watch out for. We could find some support around here, and that's where we might see a little bit of a pullback first. I'll be watching price here. I'm going to watch how the pound opens up, see how the pound reacts around here, see is the pound still bullish. We might look for hedge trades, even possible. I'm always open to anything happening in the market. I don't take a trade and think, right, we're now 140 pips up. This one's going to come down to 1.300. I'm going to hold out until it does. If I see something, this is how all traders need to be. If I see something that shows me, hold on, this could go back up, we could take a hedge long trade and take profit of the pull back up, or it could even be a longer term push up to the upside. I'm not saying that it will, but as an example is what I'm trying to explain. So always be open to taking anything in the market, take a bit of profit from a trade, stop loss at break even, and then be ready to go again and take a trade in any sort of direction that you see fit when the market shows you the signs. USD JPY. The Japanese yen had a push on all pairs on Friday. So weekly you can see a doji candle on USD JPY. Daily we can see that we broke back below the 10800 level. Japanese yen gaining that bit of strength. 4 hour we can see we just dropped below that level. Nothing really for us at the moment here. I want to see how the market opens up, especially with the news that's happening that can affect the US dollar and it can affect the Japanese yen. Should people take the money out of the US dollar, the Japanese yen could get stronger, as well as gold. So I'll be watching out USD JPY. Watch to see if we, like I just explained with GBP JPY, see if we get a pullback into sort of the 10800 area. If we pull back to there and find resistance, then we could come lower. However, if we don't and we actually manage to break back above, then this pair could go higher. Remember, market structure. You can see here, market structure, we are high highs, high lows, higher highs, higher lows. So we could still push up and make a new higher high. So again, watching next week. We need to watch how the market reacts on Monday from the news over the weekend, and then we'll see. Aussie JPY was a trade that I highlighted since last week. We were actually short on this a week ago, 2 weeks ago. Not this week, but the week before. We were ranging, being quite boring, but unfortunately this happened at 2 in the morning UK time, and we pushed down. And we didn't manage to get a nice trade since. It didn't come back to make any sort of a pullback for us to get a good risk reward. You can see here the risk would have been too much for the reward that we got, so we're not interested in those type of trades. But nevertheless, we can see here the Japanese strength pushing this down. You can see the USD JPY, Japanese strength pushing that down at the end of the day, and also GBP JPY. So a bit of weakness on the pound, and then a bit of weakness, a bit of strength on the Japanese yen. Should that continue, then hopefully we can see this dump and push down even lower next week. Now Aussie dollar and New Zealand dollar are going to be hot topics next week because we have lots of news for them at the start of the week. Aussie dollar, I'm going to drop down to the 4 hour. I highlighted this level on the last evening call last week. I explained that here we have had that push down. Now we're just having a breather with this range. So price is just having a breather after this big push. Imagine going on a run, and then after a big run, you need to sort of slow down, stop, have a bit of a breather. That's what price does in these consolidation zones. It's having a breather, then it breaks down and it continues its run. So it's how far it can continue to run for. Now, here we got broken out of that again. This was unfortunate for myself. Lots of you actually took the trade, so well done. I highlighted this in last week's Sniper Sundays video. We sort of had this channel. We kept creating higher highs and higher lows, and I was looking for short trades on this. So we had the news. This initial breakthrough was break lower was because of some news that came out for the Aussie dollar during the week, and that was during the night. And then I explained that I was waiting for a pullback higher to take a short trade. Let me just get this up. I was looking for a short trade from these regions. Again, lots of people took it, so well done. But I was looking for a short trade from there, but yet again, this kind of happened at during the night, 2-3 in the morning in the UK time. So for the Asian session, it was a very, very nice trade. See, we broke out of that, and then we came down and we sort of had this consolidation zone, and now we're breaking lower. But in general, we need to see where we can go next. So if we go to the daily chart, big push down the last 3 days. But let's see how we fare next week. You can see here that we were well overdue a pullback, a bigger pullback, as we had this big daily push on the daily chart, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Then we started to slow down. Then we pushed down. Now we're coming into that 61.8% retracement level. This is going to be an interesting level next week. See if this area can hold. See what the Reserve Bank of Australia comes out with next week, and see if we can find any support around this level to see if this can actually find support here and maybe make a push back up and continue this bullish trend. We can continue this bullish trend, and there is a long trade available, and we see some US dollar weakness. We could be in for a very big swing trade here. So that's something I'm looking out for. However, should we fail that and break down, then I'm just going to monitor it and watch how price reacts in this sort of region down here as we come back down to the previous lows of 0.6700. New Zealand dollar, US dollar, we had 25% or less, 10% maybe, about 10 to 25%. Still holding on this from our 150 pip long trade. We pull back down, and now it's taking us out here, and a monthly support is 0.6300. As explained, wasn't looking for any long trades on this last week. We got Aussie dollar and New Zealand dollar news this week. You can see here we're just toying around, finding a support, trying to bring people in to take a long trade, and then we snapped below, came back, hit as resistance, and then carried on pushing lower. On a daily and weekly, we look very bearish. Look at that weekly candle. Very bearish. So I'm watching out for this next week, seeing how price reacts and seeing how we're going to react to the news. We might find some support around here, but these are, as I said, New Zealand dollar and Aussie dollar are going to be ones that I'm watching, given out that we've got the news coming this week. And the news and fundamentals is what can really give a boost to these trades. And often, if we're going to see a reversal, it's the news that gives us the momentum to actually change direction. So we'll keep an eye on this next week and see if that's what's going to happen. I'll be watching it from Monday straight away, because, as I said, we can often see that with news and events, things can be priced in, or we can see the movement happen a few days before. So I'll be watching out from Monday morning. Just to cover the dollar index, let's just go to the daily on this. Dollar index, explaining why US dollar pairs are so choppy. Here's the last 5 days: 1, 2, 3, 4, 5, which I've been sort of highlighting all last week. Just bullish day, bearish, bullish, bearish, bullish, or doji candle. Choppy, very choppy. Doesn't know which way it's going to go. Keeping an eye on US dollar next week. We've got this sort of triangle formation forming. Going to watch out for this one. This may come into effect as well. This sort of trend line over the top. Drop down to the 4 hour. So I'm going to be keeping an eye out on this and see how price reacts. It looks like we're just going to consolidate a little bit more before a bigger move. So just going to keep an eye out on that and see what happens over the coming days and over the coming week. So apart from that, I think we cover most things. As I said, we've got a sort of idea of what we're looking for next week. But as the market is very temperamental to fundamental, we'll just have to see how the market reacts on market open. Monday, we'll just let the dust settle as always. I will be watching Euro very early, so we'll be alert for that Monday morning. But apart from that, we'll just let the dust settle and see how we react over the weekend. And as I said, normally we see the sort of right moves and the right setups pick up from Tuesday onwards. But as we have lots of Euro news on Monday, I'll be watching out for that, and we'll be updating as and when we see a setup. So enjoy the rest of your weekend, and let's get ready to go straight away Monday morning with that Euro news. Have a good evening. I'll speak to you soon. Thank you.